Listen, I'm going to tell you something that's going to shake your entire perspective on what's happening right now in the crypto space. What I witnessed today, and I mean literally just hours ago, has me more bullish on XRP than I've ever been in my entire career. And I've been in this game for years, watching every single move, every single development, every single catalyst that could potentially change everything. The Federal Reserve just slashed interest rates by 25 basis points. Now most people hear that and think it's just another boring financial headline. But you and I, we know better. This isn't just a rate cut. This is the starting gun for the most explosive alt season we've ever seen, and XRP is positioned at the absolute center of this financial revolution. But that's not even the most shocking part. While everyone was focused on the Fed announcement, something else was happening behind closed doors in Washington, D.C. that's going to change everything. I'm talking about secret meetings, backroom negotiations, and regulatory decisions that are setting up XRP for the most massive price explosion we've witnessed since Bitcoin's early days. I've been tracking institutional money movements, and what I discovered will blow your mind. Coinbase, yes, Coinbase had over 1 billion XRP tokens sitting in their reserves just 3 months ago. Today, they're down to less than 84 million tokens. That's a reduction of over 900 million XRP tokens that have been quietly absorbed by institutional players who know something the retail market doesn't. Where did that money go? Who's buying up XRP at these levels while everyone else is distracted? The answer is going to shock you. And it's exactly why I believe we're about to witness XRP break its all-time high for the first time in human history within the next 30 days. The Fed rate cut isn't happening in isolation. It's part of a carefully orchestrated sequence of events that's been building for months. When interest rates drop, capital flows out of traditional savings accounts and money market funds. That capital needs somewhere to go, and guess what's been quietly positioning itself as the perfect destination? Digital assets. Specifically, utility-driven digital assets that solve real-world problems. But here's where it gets really interesting. The rate cut isn't a one-time event. My sources in traditional finance, and I'm talking about people working at the highest levels of major banks, are telling me we're looking at a minimum of 2 more rate cuts before the end of 2025. Each cut is going to inject more liquidity into the market, and each injection is going to drive more institutional money into crypto. Now, while the Fed was making their announcement, something extraordinary was happening in Washington, D.C. Charles Hoskinson from Cardano tweeted something that sent shockwaves through the entire crypto community. He had just finished a meeting with the Senate Banking Committee, and he wasn't alone. Representatives from Ripple were sitting right there at the table, working directly with senators to craft the crypto legislation that's going to define our entire industry. This wasn't just a casual meeting. We're talking about an hour and a half of intensive discussions about market structure, regulatory frameworks, and the future of digital assets in America. Ripple had a voice in that room. They were helping write the rules that are going to govern crypto for the next decade. Think about what that means. When major financial institutions start adopting crypto at scale, and they will, they're going to operate within the regulatory framework that Ripple helped create. That's not just influence, that's positioning yourself at the absolute center of the financial revolution. But the Senate Banking Committee meeting is just the tip of the iceberg. Eleanor Tarrant broke the story that this wasn't just Ripple and Cardano in that room. We had representatives from Coinbase, Kraken, Circle, the company behind USDC, Paradigm, Multicoin Capital, and Andreessen Horowitz. These aren't random crypto companies. These are the titans of the industry, the companies with billions in assets under management, the players who move markets with a single decision. And they're all working together on one thing: getting the Clarity Act passed. This legislation is going to remove every single regulatory uncertainty that's been holding back institutional adoption. Once it passes, and my sources tell me it's happening before the end of this year, the floodgates are going to open. Wall Street has been waiting on the sidelines with trillions of dollars, waiting for regulatory clarity. The moment that clarity arrives, we're going to see money flow into crypto like never before. And based on who was in that room crafting the legislation, it's clear which assets are going to benefit the most. Here's something most people don't understand about institutional money. When banks and hedge funds decide to enter a market, they don't just buy a little bit and hope for the best. They conduct months of due diligence. They build relationships with the companies behind the assets, and they position themselves for massive allocations. The XRP reserves disappearing from Coinbase, that's not retail investors moving their coins to cold storage. Retail doesn't move 900 million tokens in 3 months. That's institutional accumulation happening through Coinbase Prime, their institutional trading platform that regular investors like us don't even have access to. I've been analyzing the data, and what I found is staggering. Coinbase went from having 141 cold storage wallets containing XRP to just 5 wallets today. Each of those remaining wallets contains approximately 16.4 million XRP. Do the math, that's about 84 million XRP left on the entire Coinbase exchange. This is the same pattern we saw with Bitcoin before it exploded to new highs. Institutional players quietly accumulate, while retail investors are focused on daily price movements. By the time the general public realizes what's happening, the price has already moved dramatically higher. But here's the catalyst that's going to accelerate everything. Tomorrow, the first XRP ETF goes live in the United States. Now, this isn't the massive Grayscale or Franklin Templeton ETF that everyone's waiting for. Those are coming in October. This is from Rex Osprey, an $8 billion asset management company, and it's the first domino to fall. This ETF is going to hold 80% spot XRP and 20% treasury securities. That means when investors put money into this fund, Rex Osprey has to go into the market and actually purchase XRP tokens. They can't just use derivatives or paper contracts. They need real XRP and they need to buy it from somewhere. With Coinbase reserves already depleted and institutional demand accelerating, where do you think that buying pressure is going to push the price? The supply and demand dynamics are setting up for the most explosive price movement XRP has ever experienced. The timing couldn't be more perfect. We've got the Fed cutting rates and injecting liquidity into the market. We've got regulatory clarity on the horizon with the Clarity Act. We've got institutional players quietly accumulating massive positions. And now we've got ETF products launching that are going to create sustained buying pressure. But there's another factor that most people are completely overlooking. The utility thesis is finally becoming reality. CNBC ran a segment this week highlighting how Ripple is directly competing with SWIFT for cross-border payments. This isn't speculation anymore. Major financial institutions are evaluating Ripple's technology as a replacement for the decades-old SWIFT network. When you understand what SWIFT processes trillions of dollars in cross-border payments every year, you begin to understand the magnitude of the opportunity. If Ripple captures even a small percentage of that market, the demand for XRP is going to be astronomical. And here's what gets me really excited. We're not just talking about speculative demand anymore. We're talking about real utility, real use cases, real businesses that need XRP to function. That creates sustainable demand that doesn't disappear when market sentiment changes. The chart analysis is backing up everything I'm telling you. Technical analysts are pointing to XRP breaking major resistance levels and retesting key support areas. The 50-day simple moving average is holding strong, and we're approaching the critical 3.39 resistance level that could trigger the next major leg up. Once XRP breaks above $4, and I believe this is happening in October, we're going to be in completely uncharted territory. The last time XRP was above $4 was January 2018, during the height of the previous crypto boom. But this time is different. This time we have real utility, real regulatory clarity, and real institutional adoption. My analysis suggests that when XRP breaks $4, it's not going to stop there. The combination of institutional FOMO, retail excitement, and genuine utility demand could push XRP to levels that seem impossible today. I'm talking about 16s, 20, maybe even higher by early 2026. Think about what happened to Bitcoin when institutional adoption really kicked in. In 2020, Bitcoin was around $10,000. By 2021, it hit $69,000. That's nearly a 7x increase driven primarily by institutional adoption and regulatory clarity. XRP is setting up for a similar trajectory, but with even more powerful fundamentals. The difference is that Bitcoin is primarily a store of value. XRP has utility. It solves real problems for real businesses. When the crypto market enters its next euphoric phase, utility tokens are going to outperform everything else because they have real demand beyond speculation. Here's something that's going to sound controversial, but I believe it completely. XRP is going to outperform Bitcoin during the next bull run. Bitcoin might double or triple from here, but XRP has the potential for 10x or 20x gains because it's starting from a much more compressed valuation relative to its utility and adoption. The Fed rate cuts are just the beginning. My sources in traditional finance are telling me that we are looking at the most accommodative monetary policy environment in over a decade. That means more money printing, more liquidity, and more capital flowing into alternative assets like crypto. But it's not just about macro conditions. The crypto-specific catalysts are aligning perfectly. The Clarity Act is going to pass before the end of the year. I'm confident about this, based on the bipartisan support and the level of industry involvement in crafting the legislation. Once we have regulatory clarity, the major ETF applications from Grayscale, Franklin Templeton, and others are going to get approved. We're looking at potentially billions of dollars in ETF inflows over the next 12 months, and XRP is going to capture a significant portion of that capital. Ripple's meetings with the Trump administration, their ongoing discussions with regulators, their collaboration with senators on the banking committee. This isn't coincidence. This is strategic positioning for the post-regulatory environment that's coming. And here's something most people don't realize. Ripple still holds billions of XRP in escrow that they haven't released yet. If they decide to withhold that supply while institutional demand is accelerating, the supply shortage is going to be even more severe than what we're already seeing. Imagine this scenario. Regulatory clarity passes, ETF inflows accelerate, institutional adoption increases, utility demand grows, and Ripple decides to halt escrow releases. That's the perfect storm for a supply shock that could send XRP to levels nobody is even discussing today. The technical analysis supports everything I'm telling you. XRP has been building a base around $2 to $3 for months, creating a strong foundation for the next major move higher. The longer an asset consolidates at a certain level, the more explosive the eventual breakout becomes. We're looking at months of institutional accumulation, regulatory progress, and utility development all coming together at the same time. The setup is so perfect it's almost too good to be true, but every single data point I'm tracking is confirming the same narrative. The rate cut today was the starting gun. Everything that happens from here is going to accelerate the timeline I've been predicting. October is when we break $4. November is when we test $8. December is when we potentially hit new all-time highs above $16. But here's the thing that keeps me up at night with excitement. This isn't just about price appreciation. We're witnessing the transformation of the global financial system. XRP isn't just a speculative asset anymore. It's becoming critical infrastructure for international payments. When banks around the world start using XRP for cross-border settlements, when governments integrate Ripple's technology into their payment systems, when major corporations add XRP to their balance sheets, that's when we'll know we've moved beyond speculation into genuine adoption. The Fed's decision today validates everything we've been predicting about the macro environment. Lower rates mean higher asset prices, especially for growth assets and alternative investments. Crypto has been the best performing alternative asset class of the last decade, and institutional investors are finally recognizing that. But within crypto, not all assets are created equal. Bitcoin is digital gold. It's a store of value that will continue to appreciate as institutions adopt it. Ethereum is the foundation for decentralized applications and smart contracts. But XRP is the bridge between the traditional financial system and the crypto revolution. That bridge is about to become incredibly valuable as trillions of dollars start moving across it. The early investors who position themselves now, while XRP is still trading below its all-time high, are going to be the ones who benefit the most from this transition. I've been in this space long enough to recognize when all the stars are aligning. The macro environment, the regulatory landscape, the technical developments, the institutional adoption, everything is pointing in the same direction. We're approaching the most significant wealth creation opportunity in crypto since Bitcoin's early days. The difference is that this time, we're not betting on an unproven technology or speculative use case. We're investing in a solution that's already being used by banks, already processing real transactions, already solving real problems. The Fed cut rates today, but that's just one piece of the puzzle. The real catalyst is going to be regulatory clarity, and based on everything I'm seeing from Washington, that's coming sooner than most people expect. When it arrives, the dam is going to break, and all the institutional capital that's been waiting on the sidelines is going to flood into crypto. XRP is positioned at the center of that flood. The question isn't whether it's going to happen. The question is whether you're going to be positioned to benefit from it when it does. This is not financial advice, but this is the most bullish I've ever been on any crypto asset. The setup is perfect, the timing is right, and the catalysts are aligning. October is going to be a month that XRP holders remember for the rest of their lives. The revolution is here, and XRP is leading it.